building. It's not just about the value building, it's about the whole narrative building in this environment, isn't it? And that's exactly what happens in this environment here, buying into this, buying into this. Just imagine you're trading the red line. That's all you have to imagine, is you're trading the red line. The only line that it doesn't have to be diverging against is the purple line. It's better if it does, but it doesn't have to be diverging. It rarely ever diverges against the purple line. So when we look at the spreads here, we're starting to recognize how the trade is setting up. How the trade is setting up. And obviously in line with how the trade is setting up, we can start to recognize that there's a big drive here on the Brent WTI spread. So that's not going to be a trade. But the divergence on this retested low here is going to be a trade. There's another opportunity. Now, we wait for the WTI spread to go back up again. There's the trade opportunity there. That's going to be another sellable opportunity right there, guys. That is beautiful. So when you look at those three trades, and as I said, this one here, this trade here is actually the best value trade because of its divergence against the purple line. But obviously this macro trade here has got a value divergence on the purple line as well. So that's a great trade. These are all trade opportunities to sell. If these are trade opportunities to sell, do you see how the trade plays out, guys? Look at this. Look at that sell there. Look at that sell there. And then look at that sell there. They are perfect top tick prices to sell into, aren't they? This first one had the biggest volume of all of them, which was brilliant. And a great sell off. And this one, absolutely perfect. Now, what I was actually saying when the audio was broken was that Max had started to buy oil into the bottom edges here. And that was one of the reasons why, if you look at what Max was doing, Max started to bid the bottom edges on oil here. And you can see that when Max bid the bottom edges here, that's one of the reasons why we've seen the price of oil reversing off this. So this was my walk away from that short oil trade right there. So that was my walk away from the short oil trade that we had, top line price. So Max helping us out on that one quite nicely, in fact. A very, very nice walk away from Max's point of view. A great trade opportunity just in there. And, and obviously that wasn't signaled by the calendar spread. The calendar spread was diverging at the time. Tim, no, not really. Don't think it's worthwhile. It's above my pay grade to go back through the lines, isn't it? The other things that we had in this trade was what? Well, value, of course. If we look at how value evolved, let's take a little swatcher at the value. And we can see a couple of key aspects of the value narrative into those high prints in the morning session. The first thing is you can see there was an enormous buying delta that was getting a huge amount of top line absorptions up here. And with the value that was evolving at that stage, that looks like an absolute genius lean up here, doesn't it? Absolute genius lean at the top edge of value. So there's the first sell trade there. The add-in sell, which was brilliant, was actually against this this green candle here. You can see the delta's almost the same level as before, but the price obviously coming off a little bit. You can see into that level there, the delta's a little bit higher. Very, very nice buy block, getting jammed, and then the big sell-off comes in. Absolute perfection. If we just carry that line across the charts for a second here, you'll start to recognize the second phase of this whole sell opportunity. And if you look at the second phase, it's even better in terms of its order flow. Look at this, guys. Look at this. Do you see it? But look at the order book. The order book's gone straight sell side, isn't it? So if the order book's gone straight sell side, if we zoom into that little phase there at the top edge, if the order book's gone straight sell side and all these buying deltas are coming in and they're all getting jammed at these two high prints up here, and we're getting the spreads coming into our favor in terms of the sell trade opportunity, I don't think there's anybody on the planet that wouldn't look at that 95 print and say, you know what, I'm going to murder this. I am going to murder this 95 sell. And obviously we got Max buying into the low price here, as you know, at 45 for 50 tick profits. Now, Sammy had that trade, I know, because he typed it in the room, sell side oil. And it went from 95 to 45 for 50 ticks, and it was the perfect spread trade, wasn't it? The perfect spread trade. So why are we talking about? Tim's asking the question about what we're asking about, what we're looking at here. And obviously this is the standard crack spread skew. So when we start working our way through the crack spread skew, what have we got? Well, we've got the crack spread. This should be negatively correlated to oil prices. We don't like it when it makes brand new highs. That's always going to be a challenge, but obviously that's something we can factor into our thoughts. Then we get the crack spread skew. This is where we start recognizing opportunities. The crack spread skew should be a lagging indicator behind the crack spread. So when the crack spread is rising, I want to see this falling. I want to see this as low as possible. So when this is rising, I want to see this falling into new lows. I want to be a seller when the crack spread skew is lower. Crack spread skew is RBOB 42 minus oil 2. What else do we build into that? Well, we build in the Brent oil WTI spread. So when we build in the Brent oil WTI, that allows us to make sure that what we're seeing is an oil misprice, not a WTI misprice, not an oil misprice. Because an oil misprice is not a misprice. If it's Brent and WTI both pricing it, it's not going to be mispriced. It's an acceptance of a lower price or an acceptance of a higher price. So this is the final line that we need to see as an absolute must. Now, obviously, we can use the Brent oil WTI skew to try and see the trades, but I don't think that's really necessary at this stage to try and get that extra bit of information. I don't think it's really necessary, but you can add it if it's something that you like to give you that extra confidence. And on this occasion, you can see that the Brent WTI spreads is absolutely spot on, perfect in these narratives. Now, obviously, the other piece we can add is very, very simple. The euro dollar. The reason why we add the euro dollar is because we want to try and trade in line with what's happening on the euro dollar. So the euro dollar here is 1 over euro dollar, so it should be confirming exactly the divergences that we're seeing. So the black line has to be high when the purple line is low. It's as simple as that. There is the trade. That is perfection for a sell trade on oil. Sammy knows it's perfection for a sell trade on oil because Sammy had the trade. If you scroll back, Sammy shouted the sell trade was in at 95, correct? And that's what I'm assuming. That's part of what Sam's seeing. The other aspect to that sell trade was the Voltics at the top edge. The other aspect to that was the sell side order book from the top edge. The other aspect to that is the divergence in the background that we're seeing on the calendar spreads here. You can see the divergence on the calendar spreads is quite obvious, quite clear. So when we see the divergence on the calendar spread coming in, the red line's the calendar spread here, Tim. The red line's the calendar spread here. So when we see the divergence on the calendar spread, we can start to recognize the opportunity at the top edges. If you're talking about the red line and the crack spread skew, it's just 1 over oil. I just want to see oil prices. So when we put the red line in the crack spread skew chart, it's just basically 1 over oil prices so that we can see what oil prices are doing against the skew and against the crack spread. So when I put the red line in it, in this chart, it's just basically the candlesticks, okay? So we can start to recognize this. Now, there's other things we can add into this. We can start asking the question, well, what do the bond traders make of it? What's their thought? What is their thought process, and how are they seeing the market? Because it's important to us that bond traders have a view on this as well. We can look at things like the concept of commodity prices against yield, so inflation narratives. And again, you can see very obviously a bottom edge divergence on this, a top edge divergence, and another top edge divergence. We never had any on this upper candle. We had to wait for this to diverge here on this retest. Right there. That's the opportunity. What else could we use? Well, of course, the other thing we look at all the time is the TIPS markets against the bond prices. And when we look at the TIPS markets against the bond prices, you can already recognize how much divergence was creeping into the high prices. I cannot sell oil unless this is diverging. As a bond trader, it would be almost embarrassing to sell oil if we never had a divergence, because that would tell us that we don't believe that the direct dealers know what they're doing. Well, I do believe the direct dealers know what they're doing. They've got a hotline to the Fed. So if I know the direct dealers are selling off inflation at this stage, then my idea is that I should be absolutely annihilating top-line oil prices, because the direct dealers have a very, very good idea about inflation. It's their job to know about oil prices. It's their job to know about oil supply and demand. And if you see this diverging off these high prices, it's a very strong case to get that sell trade on. Now you can see why Max bought oil in here. There was a very big ramp back up again here from the direct dealers. And as a result, oil prices came off the 44s, have just traded 80s. It's a pretty good storyline, right? So when the direct dealers are telling us something, we do not want to pass up that very, 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 very significant free information on our charts. And this is free information. Well, we have to pay for the data, but it's still free information, because you'd normally pay thousands of dollars for one piece of information on this, guys. You'd have to give them a little brown bag and say, right, I want to know what the oil dealers are doing. So when we look into this, we're obviously seeing that there's a big ramp down again in terms of the direct dealers' narrative. So they're thinking that as oil prices trade back up into the highs, there's going to be yet another opportunity, maybe a fade back into that print. And I'll certainly be watching the skew to develop into that price again. Max absolutely on point. And we're going to be looking for an opportunity to start working back into that oil short as the top line comes back out again. And we can see in terms of the skews, there is no skew divergence just yet, is there? There's nothing here that would allow us to do any business just yet on oil up here. And that's why the price is still going back up again. There's no trade for us at the moment against the skew trade. A little bit of something beautiful, guys. A little bit of something beautiful. Okay, careful, guys. Careful. We've got the big one coming out in 15 minutes time. The big one's coming out in 15 minutes time, guys. 15 minutes.